volatile times for currencies as well as metals. So what's an investor to do? Well, you talk to George Gero. He's an expert. He's an expert in precious metals. He's the precious metals strategist for RBC Capital Markets, and he's our guest now. George, good to have you with us on Bloomberg.
I'm very happy to be here with you, so I'm delighted you have me.
Now, you brought a little prop, but I thought it was going to be gold, but it's not really gold. It's kind of flashes gold.
It represents gold.
It represents gold. I'm going to put this badge on you. This is your badge.
This is my trading badge on the floors of the New York Commodity Exchanges.
631 Ant.
That's right. And because my first name is Anthony, it's Anthony George Gero. So 631 was the seat number. What I purchased back in 1966 on the New York Mercantile Exchange.
Were they using real dollars back in those days, 1966?
Absolutely. And we even had a silver coin contract back in those days. We couldn't trade gold until December of 1974, when I traded one of the first gold contracts in December of 1974. And believe it or not, lost money on it because Citibank at that time came out with a report that said gold is unnecessary. There are higher yielding securities available, and gold went below $100.
Boy, you know, it seems as though the more things change, the more they remain the same. You've got just as many people today seemingly talking about investing in dividend-paying stocks, saying that that's the place to be. But gold, we see gold dip today, but
it did dip today. Not
down
only
11,
did
it was down 11, and the volatility, the range was like $40 range.
$40 range, 1366 high, a $40 range, and technicians, momentum traders are frightened of that because they say when you make a new high and close below previous day's lows, that means that could be a change in the markets. And they are concerned about tomorrow's jobs figures, concerned about the weekend, because the weekend is when they announce possible currency props or devaluations or fluctuations. And there's been some talk in the market that maybe some of the folks either in the Far East or in Europe don't like the idea of dollar weakness because it'll make it more expensive for them to ship goods to the United States.
I'm getting echoes of the finance minister of Brazil and talking about currency wars, right?
Well, that the gold volatility today leads a lot of people to believe that where there's smoke, there's fire. And what's more interesting is the administration here has kept low interest rates, a low dollar, and yes, we are seeing exports, and nobody seems to believe it. Look at the price of other commodities. Look at wheat, corn, soybeans, sugar, cotton made highs, and I think that's the low dollar.
What about copper? Let me get your thoughts there.
Copper's a different story.
I know you like copper.
I happen to like copper. I happen to like silver also, but copper and platinum are very interesting. They've been doing very well recently on a spate of very good automobile earnings that we saw. I think it was Ford was up tremendously. Chrysler was up a lot. General Motors was up 62%. Of course, they're working on an IPO, so I'm not surprised. And besides that, their infrastructure needs. This week, China was on vacation, and they trade more copper than we do. And there are canceled warrants, and certainly while they were on vacation, the COMEX did get the business.
So what does this mean for the future of copper as in terms of price? Do we see copper prices go higher?
I think we may see $4 copper.
$4 copper?
Yes, just like I thought we would see $25 silver. But now, with the gold price where it is, we almost have what's called a stock split in gold, in that COMEX has a new contract, which is 10 ounces, and I'm happy to announce it here, and 10-ounce contracts can take a delivery of a 100-ounce bar right here in Delaware. And so that's interesting.
Why does that affect the market by this introduction of the new contract on the COMEX?
Well, it could open up the market to more hedgers. smaller junior mining companies, coin dealers, individuals.
People that are natural longs, people that have it either in the ground or in the vault or in the shop.
Hedge it. That's right. And here's an opportunity to hedge, because 10 ounces would represent probably 1,000 shares of one of the smaller ETFs like IAU. And so that could be very helpful to a lot of people hedging.
All right, you think gold is going higher?
Eventually, if the dollar continues on this path, it definitely looks like it would have to. However, I always say, but you have to be very careful. Don't buy new highs, because gold normally has these big downdrafts because of something happening. Early in May, you had the Greece news. Gold dropped $50 in one day because people thought that the ECB or the IMF would have to sell gold to bail out either Spain, Portugal, or some other country. And it didn't happen. In fact, it's interesting to note, gold is also up this month because the ECB has a sales pact. Every September, they can sell 500 tons of gold for member banks. And they didn't seem to have done much this time. Last year, a few of the member banks bought gold to prop up their currencies. So when the dollar goes way down, people tend to buy gold.
Well, we're going to have to watch and see what happens. Short term, maybe a pullback in gold. Long term, you remain bullish.
Yes.
And you like copper. $4.
I think so.
$4 a pound for copper. Times have changed. I want to thank you very much. George Gero coming to us from RBC Capital Markets, 631 Ant. I love it.